today, a very special treat for you. We're going to be looking at the charts of 5 stocks through the lens of an investor who has a very particular point of view. He looks at stocks through his lens of cycle analysis. Derick Tan is founder, chief executive officer of Timing and You. He says he's a market historian, has been on our show before, and is very popular. In fact, he's going to be speaking on Thursday to investment professionals, fund managers, asset managers, licensed representatives, investors over in Hong Kong. And he's going to be talking about the basics of investing in the US market. So US equity investment, we know, really gaining a lot of popularity and attention. So that's what he's doing on Thursday. We're very pleased to have his time with us today. He's an old school market technician, and it's quite rare that someone shares with you what they see when they look at the stocks of particular companies in the news. For example, we've picked 5. We're going to be looking at inflation plays and invest, and I believe interest rate plays as well today. So what are the 5 stocks that we're going to be looking at? OCBC, DBC, GameStop, Salesforce, and tech stock Google. Time to welcome and say good morning to Derick Tan. How are you? Good morning.
Good morning, Michelle. Welcome for inviting me up to Money FM again.
It's always a pleasure to have you, you know. It's quite rare that somebody shares with us what they see when they look at the stock charts and then can explain it, how it links back to an investment decision. That's the goal today. For listeners, if you're just tuning in and you're thinking, I can't see these charts, Michelle, please don't worry, because we will put up a video and you can analyze the charts that Derick is looking at. They'll come up on screen and they'll be free for everybody on YouTube. So Derick, let's start first with OCBC. We know in an inflationary environment, not quite sure how banks can do. Some say bank stocks can hedge against inflation. There's debate about whether inflation is good for banks or not. If it leads to a recession, not so good for banks if inflation is rising. So tell me what you see when you look at a particular bank stock here in Singapore, OCBC. Singapore banks really kicked off this year with a solid quarter, beating expectations on stronger fee income and lower credit costs. When you look at OCBC, have you got the chart up, and what do you see?
Are you looking at my chart?
I am now. Yeah, go ahead.
Now I'm showing the chart of OCBC just to make sure you're looking at it, right?
I am. I can see it.
Okay, good. So now this is the chart of our dear OCBC. As you can see, it has bottomed out around October last year. To me, OCBC is is a play for the interest rate, which we all know is starting to rise, and I personally think that it's going to continue to rise. All right, so it has been going up since October last year, a very nice uptrend, as you can see, together with other banks in Singapore like DBS or UOB, or even other regional or international banks out there. All right, so as you can see, I've drawn to this channel line, red channel lines. All right, so this is where we are now. All right, so if OCBC can maintain its bullish momentum, it can break this resistance here, which is the red circle over here.
And what price is that resistance level set at?
That's about 1276, 1276. Once it can break that so-called resistance level, OCBC probably may have a chance to go higher to reach this the orange circle of where we have a double resistance over there of the upper red channel line, as well as the horizontal red resistance line over here.
Okay, and for our listeners, I'm going to be injecting for our listeners so that they don't have the benefit of the charts that I'm looking at, you're looking at. So what is that second resistance level?
Yeah, the orange circle will be around 1323.
Okay.
Right? So
okay.
Only OCBC can so-called break up from the 1276, then probably we may see OCBC going higher to 1323. And if OCBC were to clear 1323, let me show another chart. OCBC may have a chance to retest its 2018 high, all right, which is about 1405.
Wow.
Which is about 1405, which is where this yellow circle is. All right. And this yellow circle is also actually the price objective of uh, uh, this base here.
Uh-huh.
This what we call is building a base. We take the depth of the base, we add on to 1276. We should roughly get about $14 as well. All right. So if everything goes right, we may be seeing OCBC heading higher to retest its 2018 high of about $14. Yes.
It is amazing how these charts really compress all that historical information. OCBC,
Yes.
for context, last traded up by 0.8% at 12.5 Singapore dollars. All right,
Mm.
next, I want to look at DBC. Now, this is a fund, and I know people in inflationary environments they've been looking at the so-called commodity super cycle and thinking,
Yes.
I wonder if I can get in on a fund like the Invesco DB Commodity Index Trading Fund, which is trading down 0.32% at about 6 cents currently, I understand. So this is a commodity index tracking fund, DBC, trades over in New York, a New York Stock Exchange. What do you see when you look at its chart?
Okay, for me, we will go. We are actually in the midst of a commodity bull run, and it will run till 2024 based on the cycle analysis. And this is some of the commodities included in DBC. Of course, we can see WTI crude is it occupies about 14.53%. Gasoline is about 14.47. We also have gold, a soft commodity like corn, soybean, which is about 5.78 to 5.47. So DBC is actually the symbol for Invesco DB Commodity Index Tracking Fund, all right, symbol DBC, which tracks mainly these commodities. As you can see, since last year, May, all right, DBC has been going up and up and up and up and up until right now. Or in fact, since last year, May 2020 till now, a lot of commodity prices has doubled. All right, so ladies and gentlemen, inflation is coming back, whether you and me like it or not. It's coming back. It's going to go higher. We will see commodity bull run till 2024. All right, as we can see, DBC, all right, this is a chart of DBC, a very nice uptrend. All right, let me zoom in. All right,
Mm-hmm.
to a 6 month view. All right, for those who are listening out there, this red color line is actually the 200-day moving average. This blue color line is a 50-day moving average. This green line here is a 20-day moving average, and this black line here is a 5-day moving average. All right,
All
so
which you'll be able to see online on YouTube, listeners who are getting a little
yes.
bit worried now. Okay, go ahead.
So DBC actually reached a high of over here around
Mm-hmm.
$19. All right. So it then had a correction. It got due because it has been rallying for some time.
Yeah.
There probably will be people taking profit. All right. So that's why there was a correction. But the good thing is recently it has done what we call a successful follow through over here. It has broken above this red downtrending resistance line. It has broke up. All right. Now, if DBC can break above this resistance here, this red color circle here, which is about 1897, all right. If it can break above this 1897, we probably will see DBC going higher or going higher. Where it possibly may go is if we were to add on the so-called the depth of this base onto 1897, probably this is what we'll see. DBC may go higher to this orange circle here, which is around 20 US dollar. This is listed in the US stock market, all
Mm-hmm.
right? And if the bullish momentum can continue, we may possibly see DBC go higher to this support and resistance, the yellow circle over here, which is around 2343. Also, ladies and gentlemen, DBC has already shown us the commodity bull run has started since May last year. It will probably continue to run up, and so this is probably something we can look at, all right, to participate in this commodity bull run. Yes.
All right. So just a note for listeners, DBC tracks futures contracts on 14 of the most heavily traded important commodities in the world. It may not be suitable for all investors because some say it's quite speculative, the way
Yes.
the fund trades, especially in a volatile market. Now, when it comes to timing, and you, Derek, before we go on to our next chart, I want to give listeners an understanding of the perspective which you come from. So you say timing in you helps investors in good times and in bad. So what we're hearing from you is built on this idea of cycle analysis. Can you give us
Yes.
just some insight quite briefly into what cycle analysis is and how it allows you to possibly track where the movements of the charts are heading to next?
Okay. So cycle analysis is actually a field of studying, analyzing recurring pattern and periodic repetition to forecast timing and turning point of different investment asset classes. And because of that, uh, I know that I've been telling be it my so-called timing and you community or even
Mhm.
wherever I give public talk that we are in the midst of a commodity bull run and we still got some legs to go, probably till 2024. All right. Why am I able to do all these forecasts? Because I think a lot of historical data, right, plus even the future market data, I combine them together, I can do projections. Also, this is the power of cycle analysis on top of a lot of traditional market analysis like fundamental analysis or technical analysis, which a lot of
Mm.
people are practicing out there. It's just that for
Yep.
me, I went US and Europe to learn about this cycle analysis. I brought it back to this region, and I'm probably one of the very few speaker or trainer to teach about this cycle analysis, to combine with fundamental and technical analysis to give the traders or investor a higher probability of winning. All right.
All right, fascinating. Now, I've always wondered what the charts of meme stocks are going to look like, especially when they have momentum trade behind them. What do they look like? So let's look at GameStop. Seems to be rewarding individual investors who've held on for months. GameStop stocks have been rallying in recent days, up the
Yes.
surge reminiscent of late January when individual investors all came together to drive shares of the company once left for dead for Wall Street. So what do you see when you look at GameStop? Wow, look at that chart.
Yeah. So this is a chart of GameStop. Based on last Friday closing price, but this is a 6 month chart. But probably if we look at a longer term chart, all right,
Mm.
this is how it looks like. Look at the very strong, even parabolic rise up in the
Yeah.
early part of this year. But, ladies and gentlemen, look over here. Look over here.
Mm.
This is what we call accumulation. On the charts, we can look at all these chart patterns, which are signs of accumulation by the smart money or institutions. All right. So for this case, there was about a 7 month accumulation of the GameStop shares. All right. After that, once it broke up from this red horizontal resistance line over here, all right, which is around $6. All right, it has been going up and up and up, and like what Michelle mentioned early this year, the story about the Reddit, all this thing. All right, so
Mm.
it was pushed even higher. All right, to reach a high of this 483. All right, in the late January. All right, so this is what I call a parabolic run. Then it collapsed, so then it went up. Now it has built a base again. So now what is happening to GameStop right now is it is back to where this red horizontal resistance line is, which is the red circle, which
Mm.
is about 295.50 cents US dollar. All right. So the thing is, if GameStop were to be able to break above this red horizontal resistance line of 295.50, it may have a chance to retest its January high of 483, which is where the orange circle is. All right, provided it can clear this 295.50. All right, so
Any
if we
idea
base
when it could clear 295.50?
uh, if you ask me, based
Mm.
on what I see, I
Mm-hmm.
do think that there's one more uh, big burst in the US market. That's why for me is I've been forecasting about Dow Zone hitting 37,000. Or this is my forecast. S&P already hit my forecast of 4,002, which I think is going to go beyond this. and Nasdaq is my target for Nasdaq is 15,000. Now it's about 13 plus thousand. All right, so we are probably going to see one more burst up for this what I call the melt up. If this were to happen, all right, and if so-called GameStop were to break this 295.50, all right, we will probably see going to challenge this 483. All right, so like what I say, if there's a melt up, which I think there is, we should be seeing once it break 295.50, it should be challenging is 483 late January high.
GameStop shares last traded down by 12.4% at 222 US dollars. So not so great news for those betting against GameStop, and lots of people betting against GameStop and AMC. So popular on Reddit's Wall Street Bets forum.
One thing I want to add is GameStop or even AMC is very volatile.
Yeah.
All right. So if you do not have a strong heart, probably you should look at something more gentle. All right, rather than GameStop or AMC.
Yeah, I mean, even news that we're seeing past couple of days. So AMC looking like it's moving up as well. Not so great for those short sellers who've been betting against it. AMC shares estimated to have cost short sellers clutching their hearts more than $1.2 billion. So, yeah, tricky one. Okay, let's turn and take a look at Salesforce. Salesforce shares last traded up by 5.49% at 238 US dollars. Is that where the red line is?
Yes. So for Salesforce, we can see that last Friday there was a gap up because they have announced a very good quarterly earning. That's why there was a gap up. All right. It managed to clear the resistance, the red horizontal resistance line over here, which is also where the red circle is. All right. Look at the gap up. But if we were to zoom out to look at the longer term view of Salesforce, which is this chart, we can see that Salesforce has been declining, having a lower high and a lower low since around September last year. It has been declining. All right. We can see there's a red horizontal, red downtrending recent line over here until last Friday, because of a good, very so-called good earning, which beat the expectation of the analysts. Yes.
Yeah.
Right. So it gave up. All right. That's where the red circle is and closed at 238.10. All right. So now the thing is, this used to be a resistance. So now once it's been cleared, so it will be a resistance turn support. If Salesforce can find support around this level, or if the bullish momentum can continue, I do see that Salesforce may have a chance to retest this high over here, which is where the orange circle is, which is about 251.23. This orange circle, which is about 251.23. All right. And if Salesforce has enough bullish momentum to clear this 251.23, the orange circle, we probably may see it go higher to where this yellow circle is, where there's a resistance zone between 266.1 and 270.92. All right. If Salesforce can clear this 251.23, we probably may see it go higher to towards this resistance zone of 266.1 to 270.92, where the yellow circle is. All right.
Got it. Salesforce last traded up 5.43% to $238.10. Salesforce, of course, a cloud soft maker, and made the news because they issued earnings and guidance that surpassed analyst expectations. Earnings per share, $26.29. They beat estimates of $1. All right, let's move. I think... Is that it? No, we still have Google. One more chart I want to squeeze in while you're here with us, Derick. Derick Tan is CEO and founder of Timing and You. So Google Cloud, they've launched a new solutions for its unified cloud data strategy. I did want to make sure that we touched on at least one tech stock as we talk about, because we've seen a movement away from tech stocks and a flight to safety, so to speak. So when you look at Google, what stands out?
All right, so this long-term chart is a 10-year chart of Google. We can see it's basically on the uptrend since
Yep.
2011. So Google is one of my favorite tech stocks. All right, yes, recently it has a pullback. All right, to its 50-day moving average because of the weakness in the tech sector. But see
Yep.
how strongly as it has recovered. So
Yeah.
this is a sign of a strong stock. Also now is almost back near to its this red horizontal resistance line here, which is about 2,431. All right, this red circle over here. Also, if we were to see this final push, all right, in the US stock market, the so-called the melt up, if Google can break above 2431, which is where the so-called red circle is, we potentially may see Google reach a price objective around 2670. Then how do I achieve, how do I get this 2670? All right,
Mm-hmm.
I add the depth of this base. That means I take 2431 minus the support, the blue horizontal line here, which is the support of 2193, the depth. I add on to the red resistance line over here, which is 2431. All right, so that will be around 2670. This will happen if Google can break above this 2431 resistance, which is where the red circle is. But we can see uh, Google has always been supported by the blue 50-day moving average, and the 200-day, 50-day, and 20-day moving average all are trending up. So this is a sign of a good uptrending bullish stock. It's just that it has so-called some correction recently, but it has covered more. It has filled up all most of the correction, make back the correction, and is probably waiting to clear this 2431 to go higher. So this is
All right.
Google.
Well, this has been really fun, especially when you have the charts in front of us, as we do. Fortunately, listeners, we are going to put this video up on YouTube so you can check it out yourselves. We covered OCBC, DBC, GameStop, Salesforce, and Google today. My thanks to founder and chief executive officer of Timing and You, Derick Tan. Have a wonderful Monday, Derick.
All right. Yes, thank you very much. For those who want to follow me on Facebook, this is me. All right. So welcome. Thank you, Michelle, for inviting me. All right. I hope to come more to Money FM to share more about my view about the market as well as other stocks. All right. Thank you,
We look
Michelle.
forward to welcoming you back again as well. Derick Tan there. This is Money and Me. You're with us here on Money FM 89.3.